Well, I think what it tells us is that we robbed from the future. In other words, the market traded up in advance of the earnings. It was no secret that the economy was going to do extremely well. Companies were going to do extremely well in reporting. So you got a lot of that before they reported, and then it was somewhat anticlimactic. Now, that's not unusual to sell off on earnings. So I'm not that concerned about it. To me, it's actually somewhat emboldening because I think you see this growth continue. The guidance also is pretty good. If you take a look at that, and very few companies said, hey, you know what? We don't have the visibility. We're going to pull back. You're on your own for the next quarter. No, most every company and everyone in my portfolio said, here's what we're going to do next quarter. Some gave guidance for the year, which has been increasingly unusual. So I think we're fine from that standpoint. My issue, my concern's not there. My concerns are more with the economy overall, how strong it is, and rates. So right now, we're seeing inflation pick up. We still got a Fed that's saying, hey, steady as she goes right now. But we're only firing on a couple of cylinders. We've got China that's doing well. We've got the U.S. doing well. But we've got Europe that's still in a recession. I don't even want to talk about emerging markets like India. So what happens when we have that synchronized global economy as vaccines roll out? You'll see a real acceleration in inflation. And I think the Fed's going to have to go earlier. At least they're going to have to stop their massive purchases every month. And that could be a flashpoint for the market. That'll be the ultimate buying opportunity, in my view, because despite the inflation numbers, as you pointed out, 10-year is lower today in the yield. So I think we're okay for now, but it's a race to when you can get that performance in before, the cards are off the table.
Now, I guess, Pete, there's some who are thinking, okay, maybe this is as good as it's going to get for earnings, and maybe this is as good as it's going to get for growth. GDP off the charts. The economic data today was off the charts. Maybe this is as good as it's going to get for liquidity. Kaplan, he's not a voting member, the Dallas Fed president, but he's starting to talk today about, hey, we need to start talking about taper. What do you make of that? Is that at play in any way as to why the market reacted the way it did this week to absolutely blowout numbers from arguably the 5 most important companies within the market?
Yeah, that's an interesting concept, Scott, but I don't know necessarily. I think that's part of the play. I think the other part of the play is that we've had this great rotation that's been going on now for quite a while, at least the last couple of months, while we had the FANG stocks that everybody's been focused on so much over the last few months relatively flat. And we've been talking about that for a while now. We've been talking about the lack of performance and when are they going to kick back in. They still haven't kicked back in, of course, but in the meantime, we've had just take a look at the year-to-date numbers from the industrials, from energy, from financials, and you go down the entire list, materials, and there has been this great rotation, and we've had this bit of a pause outside of 1 or 2 of those big tech names that made pretty substantial moves year-to-date, but most of those moves actually came in the second half of 2020. So I think it's a very healthy right now, Scott. The only thing that really does truly stand out more than anything throughout earnings season for me has been everybody is referring to the costs going forward, what's going to happen, the lack of supply, those kind of things I think could be very, very critical going forward. And that's going to be something that's going to really play a big part, I think, going forward. We didn't have to deal with as much of that now, but I think over the next couple of quarters, it's going to be really interesting to see what the shortages do look like. Will that continue to be part of the narrative? And if it's not, then that's fantastic. The markets have plenty of room. But if it is, we got a problem.
Well, I don't know. I mean, you clearly don't think we have that much of a problem because today you bought Apple calls more, you bought Microsoft calls more, and you bought Facebook calls more. So maybe you think this is just a pause that refreshes and that these stocks start moving again.
I do. That's exactly how I feel. But I'm talking about quarters out, though, Scott. I'm talking about going out 3, 6, 9 months and looking out from that perspective and seeing that kind of issue going forward with some of the supply constraints and the costs and everything else. I mean, every single earnings we've heard practically in almost every sector, we hear the concerns about prices going up and input costs and all of that. And I think at some point that will be an issue. It hasn't become an issue yet, and maybe we'll be able to help out on the supply chain. We'll see. I know the president's very committed to that side of things, which is great. But I think the problem will be, if that's going to be the case, we do have a problem. I think in the near term, and I'm talking about 1 month, 2 months, 3 months out, I think we're still okay, and I think we can see what should have been the reaction and wasn't. Apple, Microsoft, some of these various names, Facebook. I think that's
Amazon.
why I feel very comfortable, Amazon, and I feel very comfortable, Scott, about owning some calls on top of the stocks that I own.